Money Monday segment. Financial planner Rob Wilson's here to help us make sense of the wild fluctuations, how it impacts us, and what we should do about it. Good morning, Rob.
Good morning.
All right, so, my gosh, it's crazy. How do we make sense of this?
Well, you know, I haven't had a chance to make it to Kennywood this year, but last week was such a wild roller coaster ride that maybe I don't even have to go.
No, I don't think so.
Even if you don't pay attention to this all day, every day, it was enough to get anyone's attention. I mean, we had 3 of the 10 worst point drops in the Dow Jones Industrial Average in history.
Wow.
All in 1 week.
Oh my goodness.
So, I mean, those are pretty dramatic swings, but let's put this in a little bit perspective. If you go from where it closed the Friday before to this past Friday, it was only down about 175 points, which is about 1.5%. So,
wow, okay.
In theory, you know, you probably could have slept easier through that if the drops hadn't been so wild and dramatic. But it sort of is a signal that there are some things that we have to get through.
All right, so you say number one, change hurts.
It really does. We voted for change in 2008. We voted for a different type of change again in 2010, and change hurts. Let's think about when you want to change your diet or you want to get healthier and you start going to the gym. Well, if you haven't worked out in a while, you're going to be sore those next couple of days. It hurts, and I think these are some of the things that we're working through right now. The U.S. credit was downgraded. We're trying to figure out what to do with taxes and spending. All of those things are very difficult, so it's going to take some time and a little bit of pain to get through those. The economy hasn't really picked up as we would hope. And it's forcing some tough decisions. And, you know, I work with Democrats, I work with Republicans. I think each group has some good points. Here are the facts, though. There's 47% of people in the U.S. that don't pay taxes, but there's also a $14 trillion debt that we also have to work through. So those two sides are going to have to come together, figure something out, compromise in order for us to get out of this situation.
And then there's this big thing out there, the unemployment problem. What do we do about that?
We definitely have to get people back to work. And I'll talk about this a little bit later, but you know, we've got to question where we cut. I understand that spending is a problem, but you've got to think about where you're cutting. Should you be cutting education when jobs are such a major issue and we've got to get people back to work?
All right, so let's talk about now what. What do we do? What's happening in the market today?
So the markets are likely to remain volatile. So even we've got our problems here, but there's a lot of problems in Europe and throughout the world. So we're all still trying to figure this whole thing out. So markets are still likely to go up and down. You've just got to be comfortable with that and have already put some things in place to handle this situation. Let's not forget that while the federal government has problems, cities and states also have financial issues that they have to work through. So I don't think this is something that's going to clear itself up overnight. I think a double-dip recession could be possible. But let's put this in perspective again. This is different than 2008. We had a lot of reason to be afraid in 2008. We weren't sure whether the banks were going to stay open, if you needed to run and get all your money out of the ATM. This is a lot different. I think we know a little bit more about what the issues are. We're just having some problems coming to a conclusion.
Okay, so it's not that dramatic compared to 08. Let's talk about the game plan. What do we do now?
So when times like this happen, and I understand it was very scary, but it's not a question of when, it's a question, I'm sorry, it's not a question of if these things are going to happen, it's when. So when we were back in 2008 and things were bad, you had to say, you know what, this is going to happen again at some time in the future. What can I put in place? So the first thing is, I think you have to discipline yourself. When people talk about your risk tolerance, how much fluctuation can you deal with in the market, I think you have to pick a number and you say 20%. If I own something and it goes down 20%, I'm out, and we'll figure out what happens later. But you've got to pick a number before your emotions take over. When the Dow was going up 500, down 600, it's emotional. But if you've already put some discipline in place, you can handle that a lot easier. But I do think this is an opportunity to take advantage. There were some stocks or some type of investments that you probably had on your list, and you said, you know what, if that goes down, I think I'm going to buy that. Or I wish I had bought it when it was down at this price. Well, guess what? This is what it feels like when the stock price comes down. It doesn't always feel good when it comes down, but take advantage, and some of those stocks are on sale now. Big thing is, there are some things that are in your control and some things that aren't. So if the market goes down 600, there's not too much you can do about that. But you can hold your leaders accountable. And so your vote really does mean something. And a lot of the decisions that they're making help or hurt us in these types of situations. So again, question where some of your leaders are deciding to cut spending or do other things. Should we be cutting education when we have to get jobs? But just use your vote and hold your leaders accountable, and I think it'll make a difference.
All right. Talk to the leaders. Let them know our thoughts. They should listen to us. We're the ones who voted them in.
You got it.
Thank you, Rob. Financial advisor Rob Wilson's here every other Monday for Money Monday. And you can find Rob at Blazer Capital Management.